Welcome, everyone, to today's roundtable discussion, Tariffs and their impact on bonds. My name is Jennifer Rome, and I will be leading this discussion. We are excited about today's session as it's the first of our series of roundtables on current events. We're aiming for a 50-minute session today with an additional 10 minutes or so for questions and answers. All attendees will receive a link to the webinar and the accompanying slides within the next few days. So before we get started, I'd just like to tell you how you can interact with us today. Throughout the webinar, we do encourage you to type your questions in the questions box in the control panel at the right of your screen. We'll answer as many as time allows and can follow up by email if we run out of time. So it's my pleasure to welcome and introduce our National Bond Management team today. We have pictures and contact information for everyone but one. Dominica Ruback, our Assistant Bond Manager at the Chicago Schaumburg office, is with us today as well. So you'll see we have Ileana from Miami, Tammy from Charleston, Kathleen from Houston, Megan here in the Chicago office, James in New York. And you'll see I have a link at the bottom of the slide for more detailed info, including their bios and their email addresses as well. Norma's here from the West Coast, as well as Patrice, myself, and Colleen Clark is also here today. So before we begin, I just wanted to do a quick recap. We did July, that was really successful, and we received lots of questions about, oh, I couldn't make it, how can I view the recording? And we do have it up on our website for anybody to access. So I just wanted to bring that up here for your viewing today. So, okay, before we begin, we want to talk about the tariff list for the sections 232 and 301, right? There's all these different lists out there. And what we've got on the slide for you today are our best sites that we can suggest for you to access to see the list of the tariff numbers that are affected. There's the steel and aluminum under the section 232. There's the list 1 and the list 2 available with the links in there. And then the section 3.
Yeah, section 3 has not been put into effect yet, but we did hear from one of our attorneys at Sandler, Travis, and Rosenberg that nobody's really sure exactly when these will hit, but it's expected that the third round will happen faster than the previous rounds. It took a little over a month for round 1 to become effective after the comments closed, and round 2 took about 3 weeks after comments to go into effect. So there's the expectation that we could see an announcement about round 3 over the next few days, with an implementation as early as later this week or next, which actually is Wednesday now. Hopefully it will be next at the earliest, right? I did initially hear that it was going to be sometime in October, but according to our attorneys, they're hearing differently. We're also not sure if it's going to be 25 or 10%. At this point, there's been talk of both, so we really won't know until it's finalized.
Yeah, Colleen, I mean, we were really doing some digging on this, and it's all sorts of...
There's so many different stories out there. So, in fact, you know, the people on the phone may have more information than we do right now on that. So,
but and that's available for commentary, correct, Colleen?
I believe so.
Yeah. Okay, so to talk about the calculating bond amounts, we've got Megan and Ileana. If you could share your comments.
Sure. So the general rule when calculating a bond amount for a continuous import bond is to take the total of duties, total of taxes, and total fees from the previous 12 months or from the next 12 months, whichever is higher, and then take that number times 10%. Especially if the tariff increase applies to that specific principal of operation, it's really important to get the most accurate projection possible to make sure that they get the correct bond amount.
And as far as the minimums, they continue at $50,000, and that's for all continuous import bonds. And within those 50,000, you may have up to 500,000 in duties, taxes, and fees in the past 12 months. Once it passes that amount, then you have to increment your bond by increasing at the 10% rate that Megan mentioned.
Ileana, we have a question here for you. Are there any special rules for steel importers on single transaction bonds and the calculations?
No, they're not. You follow the current bond formulas and you add whatever additional fees. In a lot of cases, we saw in the previous slide that it may be 25%. One is still at 10% or maybe at 10%, but you follow the same rules. There is nothing that changes that makes it any special and any different than the previous STB rules.
Okay, so one of the things that we here at Roanoke, the managers had talked about, was that we've gotten calls and comments from customers saying, where do we begin? Right, so we thought about this, and we have some suggestions, and again, they're just suggestions that that we thought might help you get you on your way. So you call it six. They're simple, real simple steps. The first thing is we wanted to make sure that you understand that not only can the broker get the ACE portal account, but the importer can as well. And the importer can give the broker sub-account access. So the thought is you go in, visit your customer, or your salespeople to visit the customer, or you do an online meeting kind of like this and say, look, let me walk you through the process, right? You don't want to be bothered with this ACE stuff, totally get it. Let me take care of this for you. So let's walk through it and let me show you, and now let's get you to grant me access so I can see your data. Because the ACE portal account is what I would call the horse's mouth. So, okay, once you get into the ACE portal, and the importer access, sub-account access is what's critical, particularly if that importer is using multiple brokers to clear its entries, because then you probably don't have access to see all of those other data. So there are reports available, and we're going to go into that in the next slide to analyze, where you can then compare the tariff numbers that were in those hyperlinks we provided you, of all those tariff numbers subject to Section 232 and 301, and compare it with what was done. So then over the last 12 months, assume that they had those additional tariffs for the last 12 months and add up the total duties, taxes, and fees to see what would an annual amount look like. And then review that info with your importer and then talk to them about what do they expect to see for the next 12 months. And this is another thing, I don't know if any of the managers want to chime in on this, but I think that we've heard people say, well, our importers can't project. You know, they don't know what they're going to do. Colleen, do you have any thoughts or comments about that?
Well, if they know, most companies, and I know large companies and mid-size, not so sure about small companies, they do have budgets, and most companies budget out, you know, a year or two on their growth pattern and what they expect that they'll have to import to grow their business, right? They may make decisions that, hey, we're not going to import this particular product because it is subject to those duties. So it really is up to the broker to really work with their importer account to sit down and talk to them. What do you expect to do in the next year? What are your goals as far as your organization is concerned? And what will your imports be in the next year? To have that conversation.
We were talking recently, like, this is not an exact science.
No, it's not.
So the data in the brokerage system may not match what's exactly in ACE. So this is just to help where to begin.
Which is true with our ASI data that we get from customs. So sometimes our ASI data is not the same as what the broker sees in their own ABI data too. Granted, our data doesn't have the granularity of information that the customs brokers or the ACE portal may have, because we don't get tariff numbers. You know, we get the header information. So So you can look at the data from us, the data that you have in your own system as the customs broker and ACE, and you may have 3 different sets of data, yet you can probably put it all together and figure it out, for your clients.
And Colleen, ABI, most of our attendees should know, is the automated broker interface. What's the ASI?
The automated surety interface, where we get nightly downloads of our entry information for any bond that we write, be it continuous or single. We also get the increased duty bills, FP&F cases, and liquidations, anything related to the entries that we bond.
And so, step 6, after you've done all that, we recommend that you then, once you figure out what size bond you need, and maybe it's different than what the importer currently has, call your Roanoke trade bond rep, and they can help you, let you know if there's any underwriting. They can help you do an e-termination through e-bond for you, and walk you through the new bond filing and fast bond. So, okay. So we want to talk about the entry summary line tariff details report. This is the report that we talked to somebody at Customs and said, what can the brokers and the importers look at? And this is the report we were provided. We as the surety don't have access to this report. Our access is very limited in ACE as to what we can see. But this ES003 report gives you the tariff number, the full tariff number. It gives you the line tariff goods value amount and the duty amount. So it's just something to consider if you really want to. If you got an importer that says, "Help me, I don't know what to do," this is where we recommend you begin. So I'd like to do a poll. Let's make this a little interactive today. And I'm going to launch our first poll for the day. The question is, how many of your importing clients are using ACE? We're just asking you to average the amount. You have a couple of choices here. Less than 50%, more than 50%, or I don't know. I'll give you just a minute here to select your information. Okay, I'm going to go ahead and close it.
Can I just comment on it? So we're seeing here about 50%. 50% say that their clients, less than 50% of your clients have an ACE portal, and 46% don't know. So I think this is a really good tool for you to go out and get in front of your importer clients to say, hey, do you have an ACE portal? Let me help you get into an ACE portal, to set up an ACE portal account, and let me manage it for you. So not only is it very good for you to have access to it, but it's also a good sales tool for you to get in front of your client, to work with them, get them an ACE portal account. You can manage it for them so that you will always have that information to assist them, right?
All right, thanks for participating in that. We just wanted to show you one more screen on the ACE report. We were also shown that there's the query panel editor screen within the ACE report that allows you to modify the reports by adding additional data elements. So we got a screen capture of that as well, where you can include bond type code, the bond number. I mean, there's all sorts of information that you can modify your ACE reports to add additional data elements in there. So, okay, that's how ACE can help. How can Roanoke help? And actually, before we go in there, I do have one more poll question to share with you. We want to talk about our fast bond management report. So before we start, I'm going to go ahead and launch a poll. Are you using our fast bond management report? Go ahead and fill in. We're going to make you do a little work during today's session. Give you another minute. Okay, I'm going to go ahead and close the poll and share the information. So this is interesting. There's only about 29% of you that are using the report. Now that could be, it could be because we don't necessarily give the management report to all of our customers, right? I mean, usually it's a management level contact at our customs broker's client's office that has access. But we do have Norma and Tammy here to talk a little bit more about the reports here. Norma and Tammy?
Yeah, we have various reports that our customers can access through our Fast Bond program, as Jennifer has mentioned. We receive a lot of data from CBP on our surety download, so we've compiled this information into reports to better assist you. Some of these reports are generated based on your filer code, and others are specific to a bond number. As Jennifer mentioned, these reports do require special access, and we reserve it mainly for managers or heads of your company's import operations, or for anyone that your upper management may request that we give access to. So if you have been given access, you'll notice a management tab when you log into Fast Bond. If you don't see that tab, that means you don't have access, and if you want to get access or would like more information, just give us a call or email your Roanoke Bond Service representative, and we'll help you out. So to help you manage the sufficiency of the continuous bonds that you handle, we recommend that you use the entry detail report that you can find in Fast Bond, and that can be found under Principal Reports. And what this report will show you is the entries that have been cleared under the continuous bond for the last 12 months by principal and by CBP bond number. This report is going to include duties, taxes, and fees that have been paid in the last 12 months. Now, you will only be able to access or view these reports if you're the current broker of record on that continuous bond.
I have a quick question for you. In those reports, do they include the HTS codes or country of origin information?
No, unfortunately, they do not, because we do not receive that information from CBP. They will not have that information. However, even though we don't have that information, we still think that you will find this report useful when you're trying to identify which importers are being affected by the tariffs, because by seeing the duties paid in the last 12 months, you'll be able to see which importers have gone from paying low to higher duty amounts. And this report will also help you see which bonds are close to being exhausted or are already insufficient. And that should help you when speaking to the importer about determining a sufficient new bond amount.
So Norma, just a quick question for you then. So, you know, we've had brokers ask us, can you tell us which of our importers are affected by the trade wars? Basically, no, right? Based on the data that we're getting?
That's correct. We would not be able to identify those importers for you. We don't receive the tariff information, so we wouldn't have that information.
And are these reports available to anybody outside of the tariff? If it's just regular entries that aren't affected by the tariff?
Right, so these reports can be ran for any importer that has a continuous bond that you handle for them. So they're not specifically created for importers that are subject to the tariffs, because like I said, we do not receive information on which importers are affected by the tariffs. So you can definitely use this report for all of your CTB customers' bonds.
Where Roanoke wrote the bond, right? Correct.
Right. We would have to be the surety on the bond, and you would have to be the broker of record on the continuous bond to be able to run this report and get the information.
And if I can just add something there, I'm sorry for interrupting, but it's for the last 12 months. But if we just started writing the bond 6 months ago, we're only going to have 6 months of entries. Just keep that in mind. If there is a bond increase that we get, if we've just written the bond and it's been less than a year, it just goes back as far as we've been writing the bond.
Now, Tammy will go over the potential sufficiency reports. Tammy?
Right. Another great report that Roanoke has that can be helpful for you is the potential sufficiency report. And this report is run weekly in our system, usually over the weekend, and it takes a look at all the entries made against a particular bond during the past 12 months. Now, that's not the past calendar year, like January 1 to December 31st, and it's not the anniversary date of the bond to the anniversary date. It's on a rolling 12-month period. So, for instance, if they were to run the report, say, on this coming Sunday, which is September whatever, it would run from this September date back to for 12 months. The following week, that data would change because, again, it's rolling on a 12-month period. And that's important because that's how Customs looks at their insufficiency data. It's not per bond anniversary date, but it's by the importer. What entries has the importer brought in and the duties been for the past 12 months? So this report is not the official notice from Customs, but it's the heads up. Our system will generate a potential bond sufficiency notice when a bond has reached 90% of its capacity. Now, if there are any anti-dumping entries associated with that particular bond, it generates at 80% because, as we know, anti-dumping is a serious situation and requires a little bit more underwriting than general entries do. And our system will generate a second bond sufficiency report when it appears that an importer's bond is saturated. Now, after that, it's important to note that our system is only going to generate 2 sufficiency notices per year for that particular importer. So, again, it's a proactive tool. Start having the conversation with your customer. If you receive one of these notices, go into FastBond and run one of the management reports so that you can get a handle on what's actually happening to their imports and to their duties, taxes, and fees. You don't want to get caught in a situation where Customs is issuing the official notice to increase the bond, and then you're under, definite timeline to get it done, and there might be additional underwriting requirements. So again, this is a really good tool, and I'd like to bring up that we've got another report that is in the works that we will be able to run a sufficiency report for all of your customers. Like some of you may receive from us like a CTB enforced report. Well, it will show the sufficiency of all your bonds. And you can request it from your bond rep, and when it becomes available, and we can provide that to you as well.
Yeah, Tammy, it's a great report that we've actually had a couple customers say, hey, that would be really great because I've got so many bonds, I want to keep a track of them. So we run that report, we can schedule it monthly, because as you pointed out earlier, our potential sufficiency report, we designed that originally to only generate twice a year because we didn't want to send it every week. We thought you'd start to hate us after getting that notice over and over and over. So instead, on top of it, I should say, you can get this monthly report, or whenever you want to ask us for it and say, hey, run me this report, and we can email it to you until we can get it plugged into FastBond so that all of your active continuous import bonds.
And another way to the on-demand reports like Norma talked about, right? If you know a client of yours or all of the clients that will be subject to the tariffs, certainly you can just go in and run the report anytime you want.
Right. So we've got James and Dominica here. We thought we'd give you a what can happen example.
So this is an example of a steel importer that had a $200,000 bond since 2015, and they increased their bond to $1.3 million in the May of 2018. And because of the Section 232 steel duties, their $1.3 million bond was saturated within a matter of 1 month. The importer went from importing steel that was duty-free to paying 25% on all their steel imports. So Customs sent an increase letter to the importer in June requesting a $2.2 million bond. The importer then projected forward 12 months and decided that a $11 million bond was sufficient for their needs. This is a good example of where advising a client to project forward 12 months is critical, as the bond amount recommended by Customs in their letter is far from the actual bond amount that is needed. If the importer followed the Customs recommendations for the $2.2 million bond, they will likely receive another bond increase letter the following month, because Customs calculates the bond amount based on the previous 12 months. So again, it's very important to talk to your clients and to have them project forward and not look backward. Following all these bond amounts, all these bonds in 1 year will increase the surety and the importer's bond exposure due to stacking, which Dominica will go explain further.
So if a bond is not increased to an amount that's going to be sufficient moving forward, you know, the principal could face what this customer faced, where they have a $200,000 bond and they tried to increase it and get ahead of it when they received our potential insufficiency notice, but they based that probably on the previous 12 months and not what their inputs would look like going forward with these new tariffs. That's why Customs turned around and required the $2.2 million. But what the principal had to estimate based on what they were doing for the last few months since the tariffs began, and they were able to determine, well, that $2.2 million won't be nearly enough. It really should be closer to $11 million. Had they been able to do that in the first place back in May or March and increased to $11 million then, they would have skipped that increase to $1.3 million in the middle, thereby eliminating that additional exposure to themselves and the surety. So when any bond renews, there's an additional term of exposure, but when a bond is terminated and then replaced, then there's new exposure on that new bond. So the normal bond renewing every year, it might stack once a year, but if you're having to terminate and replace a bond multiple times in less than a year, that's increasing the exposure exponentially. And the underwriters will have concerns. You know, I don't know the requirements for this particular $1.3 million approval, but assuming perhaps they had to provide a letter of credit and or a general indemnity agreement, when the time came where they needed a subsequent increase a month later, it is absolutely and highly likely that the underwriters could ask for additional collateral equal to that new bond amount. And it's in addition to any previous collateral, it doesn't include that amount in the new calculation. So that could really start to impact your customers' abilities to borrow from their lenders or to get their bond increase approved in a timely fashion and meet any deadline Customs might set. They really want to increase looking forward to get ahead of the curve and avoid any potential insufficiency where they won't be able to use the bond at all.
Hey, Dominica, we've got so many topics on this one slide that we gave to you and James to talk about today, including the stacking liability or cumulative liability that we mentioned on here. We also have an acronym here, LD. Can you talk about what LD is and how they the capping of liability?
Yes. So LD stands for liquidated damages, which is the type of claim that Customs can issue against the bond. there's numerous different types of LD claims. They can be for late filings, for not reconciling your entries timely, for not paying duties on time. You know, there's numerous ones. And Customs, that's the whole reason for the bond, is that gives Customs the ability to issue a claim when necessary. So the surety and principal are capped at the bond amount for LD claims on every bond and on every bond term. So looking at the example on the screen, there's a potential for $200,000 in claims from 9/8/17 to 5/5/18. Then there's potential for $1.3 million in claims from 5/6/18 to 7/11/18. And then as of 7/12/18, through this current bond term, there's a potential for $11 million in LD claims for a total of $12.9 million in less than a year. Or, yeah. So, you know, had the one bond been sufficient, then maybe, you know, they would have only had that potential of $1.3 million going forward. But, you know, and once those bonds are terminated, the exposure doesn't go away until the underlying entries liquidate. So as long as there's an open entry, there's potential for a claim. And that's not even getting into the ID bills, which there's no cap on for principals. And, you know, the whole nother ballgame if those entries are subject to, for example, anti-dumping and countervailing in addition to the tariffs. That's a double whammy that would really hurt.
Which a lot of steel importers are subject to both.
And ID bills, if you don't mind, what is ID?
Increased duty. So if the wrong classification is used or an incorrect duty rate is applied at the time of entry, Customs can liquidate an entry with increased duties, ID, which then are due and payable with a deadline like everything else, and interest.
So, James, since you guys talked a little bit about the cumulative liability, what happens, and issuing a new bond amount, what happens if the bond is terminated and the importer doesn't get a new bond, and they obviously can't use the current bond anymore? How do you still perceive that you have liability on the bond?
Basically, if the bond is canceled, if there's still open entries under the bond, there's still exposure there for the surety and the importer. So in this example, you see that there's an open entries column. So even on the bonds that were terminated in 2015 and 16, you know, there's still open entries under those bond terms. So that means there's still open risk for the surety. So that's there's still open exposure there, even though the bond is canceled.
Okay, and I think we just have, one other question. I know in our previous webinar, we talked a little bit about fast terminations. Dominica, can you explain what they are and when those can be done in a situation like this?
Yes. Fast termination is relatively new. A standard termination with Customs on a Customs bond requires 15 days notice. So if I submit the termination today, 15 days from today will be the termination date of the bond, and that's the standard procedure. With a fast term, if we can justify it to Customs, they will enable us to terminate a bond in less than 15 days. And this is handy in a few instances where Customs has rendered an extremely insufficient bond or a grossly insufficient bond insufficient without much notice, meaning they turn it off so that no principal can make entries. If they can't make entries for that 15 days while we wait for a new bond, you know, that's really causing a lot of problems. So if we can justify to Customs, hey, we'd like to terminate this bond tomorrow or today so we can put a sufficient bond in place for this to protect your revenue, you know, they might let us do that, and that would enable us to help avoid an insufficient bond and the possibility of trying to get single transaction bonds approved, which we all know can be really difficult as continuous bonds get larger. Just imagine what the singles might be if you're having to calculate value plus duty and the tariff. You know, that could look ugly. So we want to avoid and help the underwriters and help the customers avoid singles, and a fast term is sometimes our only option. But it is at Customs discretion to approve it or not. So we've really been using that only when there's a grossly insufficient bond. We have had times where we tried to get a fast term and we were denied, so they still had to wait 15 days. So it's really at Customs discretion, but it's a tool we try to use when we can.
And Customs, I mean, when we've been monitoring these deficiency notices that Customs is issuing, And I don't know that we can particularly guess when they're going to call it grossly insufficient, but they use it in the letter.
Yeah, because we see our potential insufficient notices come out months in advance of when customs might notice a bond is insufficient. And I've got several bonds where I've been working with my customers for months because the bond has been insufficient. I would consider grossly. If it's over, it's over. And nothing, I haven't seen customs issue a letter, and then other companies will get close and customs issues the letter before they even go over that amount. So there's really no knowing when customs is going to find it, and you want to be ahead of the game if you can, and pay attention to our notices so you don't have to scramble when customs finally catches up and says, hey, you need a bigger bond.
And if I can add to that, if anybody's ever been at a session that I've done, I always like to talk about statistics, and we don't even have a statistics slide, Jennifer, I'm shocked. But to what Dominica was just saying, as far as, I got to throw some statistics out there, I'm sorry. In August, there were 397 insufficiency letters issued by customs for all sureties, right? Of the 397, 98 of them were the same importers from July. So 25%, essentially, 25% of the insufficiencies found in August were the same importers in July that had already increased their bonds. So that's a big statistic. It's 25% of those that were issued in August also had a bond increase in July. So keep that in mind and really push your importers when they get these insufficiency notices, really look at what you might be importing in the next 12 months, because they certainly don't want to have to get a new bond every month.
I think, Colleen, that might be the struggle, is that we've heard that importers say, I'm not increasing until customs asks for it. And from what I'm understanding is they're getting the letter and they're saying, well, customs says I need 100, so that's what I'm going to get.
Yeah, that's tough. It's just an education, and I know it's really a struggle for brokers to convince their importers of that. And if their importers won't listen, they won't listen, right? I mean, there's not much they can do about that, but certainly they'll feel it if they have to pay new premium every single month or get collateral, right? I mean, those are some of the things that you can tell your importers is, look, there's a premium charge, look, there could be collateral, you have to provide financials, there's additional risk for the surety also. So it's best to forecast out rather than having to get a new bond every month. And have that liquidated damage risk. I think that's a really good argument for you guys too, is to say, had this steel importer right here not filed the 1.3 and just went from 200 to 11, they took off $1.3 million of their own liquidated damage risk right there, as well as ours. So we appreciate it too. But that just saves them that liability, right?
Yeah.
Colleen, if I may add, another area that they may save on is demerge. I personally had a bond that went grossly insufficient. They did not listen to us. They just did it for the bond amount customs said on their letter. A month later, again, another gross insufficiency. And at that time, they had to pay $21,000 in demerge, which is an additional cost on top of everything.
Exactly. Good point.
All right, so Colleen and Kathleen, if you could address the debit vouchers.
Sure. So the Customs Surety Executive Committee, Roanoke is a member of that through our Surety Association, the International Trade Surety Association. We were informed by Customs just recently, well, in the last month or so, that they took a look at all of the claims types, and they found that 45% of all debit vouchers, and debit vouchers are a failed ACH transaction. So Customs goes in and pulls money from a particular account, and the money's not there, or it's short, so it totally fails, right? So a debit voucher is non-payment of duty in an ACH world. So they found that 45% of all these debit voucher claims were a result of the account holder or the bond principal not notifying the bank that Customs was going to go in and pull the money out on a monthly statement, or that they have a limit on their account. So say, they owed $12,000, let's say, for a monthly statement, and their limit was $10,000. So that fails. So it shows as a non-payment. It wouldn't go through at all. So they're seeing 45% of all of these debit voucher claims are really a technicality. If you think about it, they could have money in their account and don't mean to bounce it. It's just they haven't notified their bank that Customs is taking the money or that they have a limit on their account. In the environment of today with all these tariffs and those subject to the tariffs, they really need to get to their bank and notify them in particular that Customs will be taking money out if they're on monthly statement. And secondly, they need to really look at what they're going to be paying monthly to increase their limit for somebody withdrawing money from it. So it's really important. Another reason to get in front of your importer clients and a sales tool to say, hey, you know, we've heard this, so you really need to be careful and make sure you're not going to have any claims, because Kathleen will talk a little bit about the issues with these claims.
Anytime the surety sees a red flag, for example, claims, debit vouchers, which equates to essentially duties not paid to Customs, they're going to want to take a closer look at the importer, whether they have a history of claims, and in particular debit vouchers, since this indicates that duties weren't paid to Customs. A surety underwrites a bond similar to a loan. If there are any indications that the importer has not paid a bill, the surety may decide to request financial statements. They may decide to request an indemnity agreement, often referred to as the GIA. They're going to want an explanation from the importer as to what happened, proof that the claim or the debit voucher has been resolved. And in the long run, if the surety isn't comfortable with any of that information provided, they could potentially ask for securities such as collateral, you know, in the form of a letter of credit. So it's absolutely worthwhile for any importer to take steps to avoid, you know, creating red flags such as a debit voucher and stay off the surety's radar, so to speak. I also wanted to mention, keep in mind that debit vouchers and any unpaid debt can affect the bond amount. In Customs' current bond formulas, there's a formula called the analytical, where Customs takes into account the importer's duties, taxes, and fees paid in the last 12 months. But in addition, they tack on an additional amount of any unpaid bills or debit vouchers are taken into account dollar for dollar. And so that can absolutely increase an importer's bond amount.
Very good.
Kathleen, can you clarify what additional scrutiny means on the slide?
Well, I actually kind of covered that just a little bit. So again, if the surety has any concerns or that basically Customs isn't being paid, they're going to want to ask for financial statements, possibly the indemnity, explanation, proof that the claim was resolved. So the importer is going to be kind of under the magnifying glass or microscope, so to speak. And, you know, we all know it's kind of better to stay off the surety's radar, right? And not be noticed. Otherwise, you're going to be getting, you know, underwriting requests such as, let's see your financial statements. Not to mention, the surety is going to want to understand what happened, and they're going to want an assurance that it's not going to happen again.
Colleen, can you talk about any penalties that Customs may assess for the non-payment or late payment of the tariff?
Sure. Technically, it's liquidated damages for non-payment of duty. The calculation is once the duty is paid, so an importer fails to pay, and it's a month later when the payment gets made to Customs. Customs will then issue a late file penalty or a late file liquidated damage claim, and the amount is 0.1% times the duties, taxes, and fees times the number of days late plus $200. So if it's 30 days late, then it's that 0.1% times whatever the duties, taxes, and fees that were unpaid and finally paid, times 30 days plus 200 is a typical late file claim.
All right, so now is the time. Submit your questions if you haven't already using the GoToWebinar panel. and we will have one of our many, many panelists answer your questions. And, you know, we've got a couple already, as well as some that the managers have brought themselves that they've received. So, Colleen, I'm going to start with you, if you don't mind.
Okay.
We've got a submitted question here. We've been informed that Customs has begun to simply flag importers' bonds as insufficient when their bonds are severely or grossly insufficient. Have you seen this occur? If yes, have you discovered a pattern to when Customs simply flags the CTB as insufficient versus providing them that 30-day increase letter?
Yes, we have seen this. We haven't really seen one rendered insufficient immediately in the last month or so. I like to say that Customs has a softer side these days because they do understand the issues that importers are having, knowing that, well, for example, the 25% of the August insufficiencies were the same importers that were on the July insufficiency reviews. So they are working with importers now. They previously were rendering insufficient, grossly insufficient, but we actually got a phone call. I think were there four or five. I did get a call from Customs at the Revenue Division advising us with a phone call saying these 5 bonds are grossly insufficient. We're sending you the letters. Just wanted to give you the heads up. Start working on them. We're not going to render them insufficient or inactivate them immediately because we'll give you 7 to 10 days to let us know what you're going to do. Most of them were because of the duty amount, the regular reviewers formula, and there was one, an analytical formula, because there were some increased duty bills for that particular importer that were unpaid and past 180 days. So they had been immediately rendering insufficient. I'm sorry, I'm getting wordy in my answer. They're being a little bit softer these days and reaching out to us so we can reach out to our Customs broker client and they can reach out to the importer.
Great, Kathleen. This question is going to be for you. How is Roanoke managing the potential need for bigger bonds and the Section 232 and 301 proclamations?
Okay. Well, generally speaking, we try to get the information out to clients and the trade community through both emails and webinars. And in this case, alerting the trade community and encouraging proactive monitoring is really essential. We track sufficiency, and we'll send an alert to an importer when they're within 90% of their bond capacity, or if they import ADD and have any ADD CBD activity, then we will actually send that alert out at 80% capacity. In addition, we offer the management report so that you can check and track your importer's activity. And just a reminder, I think we mentioned this previously, if clients would like us to send a list, if they would like to send us a list of their importers affected by the tariffs, we can run sufficiency reports on these clients and send that information to them.
All right, we've got another question, one that was submitted and actually one that our manager has prepared, so it's a good one. We've determined our customer needs a bigger bond. Ileana, what does Roanoke need to process an increased bond?
Well, each case is on an individual basis. The surety will review their history. We'll also see the size of the bond needed and go from there. Most of our CHBs, our Customs House brokers, currently have underwriting authority up to $100,000 for domestic principals that have general merchandise. The best way in our case, I believe, is to contact your bond service representative. We can always answer any questions you have and run it by the surety. If we do need something additional, maybe a financial statement, maybe something else, we will work with you on that too.
And this is Colleen. Ileana, if I can just add to that, I have had discussions with the senior vice president of our underwriting unit, and we agree, he agrees with me that the risk for these tariffs is short term compared to something like anti-dumping, right? It's more immediate. So the underwriters, if financials are required, they're going to be looking at more of the short term and the cash position of companies, not as opposed to, but they're going to be looking at that closer on these, because the duties are due immediately, well, within 10 days or up to 45 if they're on monthly statement, right? So it's a little bit different risk. It's duty risk, but it's a different risk than anti-dumping or countervailing duty. People are so used to hearing, oh, we need collateral or financials for anti-dumping and countervailing duty. Well, that's true. We do for the tariffs, also for the 301s and 232s, but it's very subjective is all I'm going to say. I'm not going to say we don't need collateral, because sometimes we do, but it is subjective on a one-by-one basis.
Real quick, too, I just wanted to, Dominica, if you don't mind, we hear you say the term very casually, financials. What does that mean when we ask for financials?
From the underwriter's standpoint, the most desirable information they would want to see is a complete audited CPA, independently CPA prepared financial statement with all the notes and the underwriter's independent auditor's report. Second, to an audited, they would like a compilation or a CPA review. Any CPA prepared financial is always going to be the best. Aside from that, if a company, some companies aren't required to have an audit or CPA prepared financial statement, then at minimum you would need to see a balance sheet, income statement, and a statement of cash flows if available for the most recent fiscal year end. So most companies December 31st, but some people have other dates, whatever that most recent date is. And we'd like to see the most, if it's over a year old, that's usually not going to be acceptable. It has to be within the last 12 months.
So since you just described sort of what we're looking for from financial statements, James, there's a question here. Should I request a financial statement from every importer that needs to increase their bond due to the tariffs?
Like Eliana just mentioned, most of our custom house broker clients have authority up to write a continuous import bond up to $100,000 for domestic importers that bring in general merchandise. If your bond falls outside that authority, or if the surety has flagged the importer due to underwriting concerns, your bond request will then be directed to the local offices, and then we'll let you know if a financial statement or other information is required to continue reviewing that request.
All right, so tacking on to that, hey, Norma, if you could address this question. So say we need underwriting information. Is Roanoke willing to speak with the importer directly about their questions related to the bond amount or underwriting requirements?
We can, and we have in the past. However, we prefer that the customs house broker have the initial conversation with the importer. We feel that ultimately the customs house broker, it's their client, they have the relationship with them, they have the majority of the communication with the importer. So, we can assist with any questions the broker may have if they're having trouble communicating information to the importer, especially when it comes to our underwriting requirements. You can definitely contact your bond service representative by email or by phone, and we can help answer all your questions. And if you would like us to speak directly to the importer regarding our underwriting requirements, then we can do so, but we would prefer that you are included in the discussion, meaning the customs house broker be included in the discussion, whether it be by email or on the phone. When it comes to calculating bond amounts or other bond-related issues, we're not licensed customs house broker, and we don't want to give the wrong information. So there may be a time when we might recommend that you or the importer contact an attorney or contact CBP directly if you don't know the answer.
Great. And then let's just say after you guys, the financials are reviewed and we determined that possibly collateral may be required, Tammy, if that collateral is required, what form of collateral is acceptable for the surety company?
The collateral that's required for the surety is a letter of credit, and it has to be in the format that the surety provides, which is an irrevocable letter of credit. And the bank has to be pre-approved by the surety to make certain that it meets certain criteria. The surety no longer accepts cash collateral or CDs or anything of that nature due to what's called a clawback clause or clawback period. And that's a period that comes into play if an importer files bankruptcy. And the clawback period is 90 days prior to the filing of bankruptcy. So in the event that the clawback period is enacted by the bankruptcy court can demand any cash that was paid by a bankrupt company to be reimbursed. So if the surety just obtained some cash collateral in the past 90 days, the surety would be faced with giving that money back to the importer. So with an irrevocable letter of credit, that clawback period does not come into play. Now, Roanoke is working with the NCB FAA on legislation that would allow customs brokers and sureties, not just Roanoke, but any surety, better standing in a bankruptcy situation, so that they would no longer have to be subject to that reimbursement requirement.
Hey, Tammy, kind of tacking on to that. So say a letter of credit is required, right? And it's a situation of a mandated increase from customs. It takes a while sometimes to get that letter of credit posted. Sometimes, like Domenica's given me the number 3 sign, 3 weeks sometimes. And if you're only given about 15 days or so to respond, how do we normally handle that? I mean, will the underwriter let us rewrite the bond before actually receiving the letter of credit?
In most cases, yes, and you are correct. It can take up to 3 weeks, even for just a domestic company, and foreign companies, sometimes it can take longer. I know I've been in a situation where, you know, the importer, being in Europe, everybody that could make those decisions and start those wheels in motion or on vacation or on holiday. So yes, the surety is willing in most cases to you know, work with you and, you know, go ahead and let us proceed with the increase. But most often what they are going to do before giving us that yes is they're going to want a note from the bank indicating their intent to provide the letter of credit. You know, that way that's, you know, something positive the surety has. They know that the importer is in communication with the bank and the bank's on top of it.
Okay, I was just, oh, go ahead.
No, sorry, I just wanted to add, in terms of the bank, something that we've noticed, you know, as if you're talking to your importers, you know, showing them reports and things like that, it would be good that they start talking to their banks ahead of time as well. I think that we've been through a few meetings around, and a lot of the banks aren't prepared for the amount of letters of credit and or even the amount of money that's coming in and out with the new tariff. So I think having a strong relationship with their banks is something that an importer should definitely look into as well.
Hey, Patrice, I have a question for you, not on the letters of credit, but underwriting in general. We did get a question submitted based on the number of increased notices we're getting, as well as proactive requests that we're getting for larger bonds. Will there be delays in obtaining approval for bonds that require underwriting?
No, definitely not. Our bond teams and underwriters are fully aware of what's going on and the extra workload that not only we have today, but that we may have in the future. And all hands are on deck, as you say, to ensure timely review and underwriting decisions, just to ensure that the bonds are being replaced in a timely manner. Everybody here on the webinar can attest to that, and all of their teams and staff across the country as well.
All right, one more question then. We're just on the 2 o'clock mark, so here in Chicago. Colleen, we have a submitted question here. What happens to those importers who receive a liquidated damage or CBP bill for almost $500 for a recon that was an error due to the ACE changes? Does that affect the bond sufficiency bond amount? Because, by the way, we filed a protest to remove this bill issued in error.
This would not, this particular type of claim would not impact the bond amount because it is protested or petitioned. Liquidated damages are generally petitioned. Increased duty bills are protested. So as long as an importer or the broker is assisting that importer with addressing the claims timely, liquidated damages, they have 60 days to petition or pay, and then if there's a demand on surety, and then we get 60 days to petition or pay, file an offer and compromise, whatever. So as long as a claim is being handled within the time frame that is allotted, there is no need to worry about a bond sufficiency amount.
Okay. All right, well, everyone, thank you for joining us and taking the time to attend this discussion today. Now's a good time. If you haven't done so already, you can still submit your questions. We will leave this webinar open to collect any more questions and reach out to you if we haven't addressed your questions during the discussion today. Remember, you can access the handouts. They'll be sent to you. And I'd also like to take an opportunity to let you know that a short survey will launch at the conclusion of this session. So we would really appreciate your feedback. It's how we build our future sessions. So thank you again for joining us today, and this concludes today's session.